So welcome back once again. Now that we have adequately understood what is a stock, what is a stock market, and how a trade happens in the stock market, let us now try to place a buy or a sell order. Let us do it practically so that we know how to place a buy or a sell order. But before that, we have adequately discussed that whether you want to buy shares or you want to sell them, what you need is basically these three things: a bank account to hold your money, a trading account to place an order or to trade or connect with the exchange, and a demat account to reflect your shareholdings. All right. And I have also told you that it is preferable if you have a 3-in-1 account for a seamless transaction. So now what we do is we will log into my trading account. I have my 3-in-1 account with this ICICIdirect.com, or the company's name is ICICI Securities. Now you may call them a broking house, or you may call them a depository participant, or you may call them a clearing agent, whatever, but all three functions are performed by them. So what I do is I enter my login details, and when I click on login, I go to this page, alright, the opening page. There are various facilities which are reflected on this page. Depending upon in which country you are, which trading platform or which broker you are subscribing to, the layout of this page may be different. But broadly, the procedure or the concept of buying and selling would remain the same. For different platforms, to understand the facilities does not take much time in this world of Google and the electronic world. So this particular platform, ICICIdirect.com, it has got these facilities. Alright. And now, since we are concerned with equity, buying or selling in equity, I will click here on equity. The moment I do that, it shows me the various facilities or a drop down menu under the head equity. And now, since we are thinking of buying shares, so the first thing which I would like to know is whether I have adequate funds in my bank account. And if I have my funds, then how much do I have? What is the limit? So I click on this allocate funds or limit. The moment I do that, I come to this screen, and here I see that in my bank account I have got adequate funds. I also have adequate funds in my trading account, which I have allocated earlier. And then out of this, I have adequately allotted some amount, almost 1 million, for the secondary market purchasing or selling. Alright. So now since I have got adequate funds, what I will do is I will click on this place order. The moment I click on place order, this screen opens up in front of me. A very important screen, because here I am going to put in or fill up all the details required for purchasing a share. Now, depending upon which trading platform you are using, in which country you are, the layout of this purchase order may be different, but conceptually the things remain the same. So just listen patiently and try to understand what we are doing here. Alright. Now these are the various things: cash buy, cash sell, and these other things, do not worry about them at the moment. We are just trying to understand the basics as beginners. So we either want to buy in cash or sell in cash. At the moment I am trying to buy, so I have clicked on cash buy. Alright. So the product is cash, and the exchange, I have to select one of the two exchanges, because in India we have got two exchanges, the National Stock Exchange and the Bombay Stock Exchange. If in your country you have only one exchange, then you may be shown only one option, or rather only one exchange. Alright. So what I do is I select NSE. Alright. I select NSE, and then you see this view your limit. If I have not seen my bank account, how much money is there or what is my limit for purchasing, then I can click on this and see how much is my limit. But now since we have already seen that, I know I have got adequate limits. So what I will do now, I will feed in the stock details which I want to purchase. So I want to buy a stock called National Aluminium. So I fill in here as National Aluminium. And then if I have to, if I have stored these details in the cloud, then I can get these details from the cloud only. But here I am doing it individually. Every aspect or every column I am trying to fill up individually. And then what is the current market price for the stock which is going on? If I click on this get quote, I will get a quote. But I don't want to do that at the moment because I know the stock is trading somewhere around 89 rupees per share. Alright. Then I fill up the quantity, how many I want. I want 1,000 of them. So let me fill in 1,000. Okay. Once I do this, then these are the important things. Alright. Before I explain to you the order validity, let me explain the order type. There are broadly two types of orders. One is the market order and the other is a limit order. What is the difference? If I click on the market order and then when I proceed further, my order will immediately get executed at whatever is the prevalent market price at that particular time. Alright, immediately the order will get executed if there is somebody to sell at the prevalent market price. But I don't want to buy at the prevalent market price. I want to put my own limit. So I select here the limit of 91.75. Okay. You see, I'll explain to you this a moment later. But before that, let me explain to you what are these three things: day, IOC and BTC. Now, if I select the market order, then I don't get this choice because market order means immediately whatever is the market price, my order will get executed. But when I select a limit, then I have these three choices. One is the day. That means my order will go to the exchange and it will remain in queue over there. As soon as somebody wants to sell at my limit price or when the market price comes to this limit, then my order will get executed. Otherwise, at the end of the day, it will automatically expire if my limit does not come. Alright. Second is the immediate or cancel. It is something similar to the market order. I place a price here, and if the share is available at that price, somebody is wanting to sell at that price, then it will immediately get executed or it will get cancelled. Either immediate execution or cancellation. Immediate or cancel, IOC. And the third option is valid till cancel. If I select this and I put a price here, then my order goes to the exchange and it remains valid not only for the day, but it remains valid for 30 days or till I cancel that order. That means I won't have the trouble of placing the order every day. It will remain there till it gets executed or till I cancel it. Alright, so we have understood these things. I have placed a limit of 91.75 and I also place a stop loss trigger price of 91.7. Please listen carefully now. Try and understand this. You see, I know the price at the moment is around 89. So even if I put 89.05 or 89.1 or even 89, my order will get executed and I can purchase at 89 only. But why am I wanting to purchase at 91.75? Why am I willing to pay a price more than what is the prevalent price at the moment? Now this you will understand when you learn about the strategies. This is only a basic course for giving you a broad understanding. So don't bother about this thing at the moment. Just try and understand that I do not want to buy when the price is in the downward journey. The price is now 89. It may go to 88.5. It may go to 88. I do not know. But my analysis tells me that if the price starts rising up and the moment it crosses 91.75 or 91.7, then its upward journey will begin. So I want to buy the stock during its upward journey and not the downward journey. And therefore I have placed a limit, a trigger over here. This trigger, you have heard about the trigger of a pistol or a gun or something. The moment you press the trigger, the bullet goes out, isn't it? So this trigger price is something which will actually trigger my order. If I don't put this here, if I just put 91.75 and I proceed ahead, then what will happen is, since the prevalent price is 89, my order will get executed at 89. I don't want that to happen. Therefore, I have placed a trigger here. So my order will go to the exchange. It will remain there dormant. It will not be active. But if the price reversal takes place from 89, if the price starts moving upward, then the moment price comes up to 91.7, the moment the price reaches 91.7, my order, which was so far dormant in the exchange, will get triggered or it will get activated. And once it is activated, then between 91.7 and 91.75, it will get executed. And I am confident that if it has crossed 91.7, the upward journey would have begun. So my price will keep moving up for some time at least. So I hope you have understood the concept of this limit price, the trigger price, the market order, the limit order, and these three options. So now I click on buy now. The moment I do this, it goes to the next screen, and here I can see all the details before I proceed further. Alright, so now you can see here all these details. Limit price I have placed at 91.75 and the last traded price here is 89.95. When I started explaining to you, it was somewhere around 89. Now it has become 89.95. So that means the upward journey has begun. If it goes up further, the moment it comes to 91.7, my order, once I place it, will get triggered. So far I have not proceeded, I have not placed it. Now I am clicking on proceed. So the order goes to the exchange. Alright, my order has been sent to the exchange and it is lying dormant over there. The moment the stock price comes to 91.7, my order will get triggered and it will get executed between 91.7 and 91.75. Alright, now what happens after some time, I will see here in the order book. Here I go to the order book and I see there. So I find, see this National Aluminium, I have placed the order 1000. The order has got executed. Okay. Other things I have, just concealed, nothing, confidential, but I don't want you to get diverted or disturbed. So I have just kept this as open. This National Aluminium at 91.75, 1000 shares have been purchased. The order has been executed. If I want to buy again, I can place reorder and I can buy them again. Alright. So once I have done this, once the order gets executed, the same moment amount will get deducted from my bank account. So this 91.75 multiplied by 1000 will get deducted immediately from my bank account. But the shares will not be reflected in my demat account immediately, because as we have discussed earlier, some behind the curtain verification and process has to take place. So to reflect in my demat account, it will take T plus 2. That means today is the T day, the transaction day. So tomorrow and day after tomorrow, these 1000 shares will be reflected in my demat account. So when I want to see that, I will go here I will go to the portfolio and statement. I will click on the portfolio and I will be able to see that it has come into my portfolio. All right. So what you have seen now is how we place a buy order for purchasing some shares. Now, if you have to place a sell order, then it would exactly be the same. I don't think we need to repeat that procedure here. It will be a waste of time, but just the main points I'll explain to you. See, we had selected the cash buy. Now, if you want to sell something, you will have to select cash sell. All right. And then what we did, we checked before starting that whether we had adequate money in our bank account because we wanted to buy. Now, when you want to sell the shares, you will have to make sure that there are adequate number of shares in your demat account. Only then you will be able to sell them. You can't sell the shares unless you have them, isn't it? So that is what you have to select, or rather that is what you have to check. And then you select the exchange as we did now. You put in the stock which you want to sell, put in the quantity, select whether you want it to remain valid for the day, whether you want to execute it immediately or want it to cancel immediately, or you want to remain it valid till you cancel them. All right. Then you select whether you want to have a market order or a limit order. These three choices you get only if you select the limit order. But in market order, it is immediate execution. All right. So let us say you have selected a limit. Then you put in the limit price here. Now the point to note is that, for example, the current market price is 89. If you put here a limit, say you put a limit of 90. In that case, what will happen? The moment price comes up to 90, your order will get executed. And other thing is what you want to place a trigger also. If you want to place a trigger, that means you don't want to sell it now. You don't want the order to get, in the waiting, or you don't want the order to be active now. You want the order to get activated only when the price starts falling further down. That means if it is 89 at the moment, then you may have to put the limit lesser than 89. Maybe you will put 88. All right. And then the limit here, stop loss trigger price, you may have to put 88.05. So that in the downward journey, when the price comes to 88.05, it will get triggered, and between 88.05 and 88, it will get executed. Got the point? I have repeated the significance of the stop loss trigger. I hope you have understood it. Just in case you have not understood this, do not worry. You can ask me questions in this platform and I will explain to you things in detail. I am deliberately not going into more details because this is just a comprehensive course for a broad understanding of the stock market. Alright?